Hey guys and girls, just cool. Hey guys and girls, hopefully everyone's having an awesome week. Apologies for the delay of us getting on tonight here in Queensland office, and yeah, just had to get my IT guys to correct a few things with the presentation. So just want to give everyone the opportunity to check in. I think that everyone's good to go now. So yeah, welcome aboard and thanks for tuning in. Hopefully I don't have any technical difficulties. So today, what I want to do is first and foremost run through a presentation. I've only got one screen where normally I have two screens here to work from, and I will hopefully be able to take your questions a little bit later. So yeah, with it, just getting my just got my IT guy here getting the questions boxed up for us all. So tonight I want to talk about something very important and a big crucial part of the business, which is buyer's agency. A lot of people, know B.Invested for being a buyer's agency. A lot of people, know what we're all about. A lot of people don't know much about us. A lot of people have been following us since, the last sort of 6 months, 12 months, may not have seen me over the last 10, 12 years talking about, how to build a property portfolio, how to get to 10 properties, how to, get yourself financially free, in a 5-10 year period. And over the course of the last decade, it's been very humbling to be a part of people's lives and having them entrust us to be able to help them reach financial freedom using property as a primary sort of vehicle to get there. It's not all about the property. There's lots of people that talk about different things when it comes to property and investing. Everyone has their own sort of opinion and all that sort of stuff. For those of you that are new around here, a little bit of a background on myself. I personally own over 200 properties. I started investing at the age of 18 in 2003. I was able to retire from the workforce at the age of 24 in 2009 in the middle of the GFC. That's why I was so excited to see 2020 us heading into a depression, because the opportunities that are out there are amazing. And some people are upset. I was talking to someone today, they're like, I've never seen someone smile so much as you, Nathan. And that's just because I'm so excited about what is out there in the marketplace and the opportunities are out there. So what does a typical buyer's agency do? I've got here some little notes because I'm working with a different type of setup than normal. So what does a typical buyer's agent do? A buyer's agent is basically the reverse of a real estate agent. You have a real estate agent that works on behalf of a seller, represents an owner, trying to get the highest sale price for the owner. And then you have a buyer's agent, which is someone that's here to act on getting the best price for the buyer. So I built this business, started in 2009, B.Invested. We've been in business for 11 years now, and the buyer's agency started at that point as well. And when I first started the buyer's agency, there wasn't any other buyer's agents in the market. It was a very new space. I remember I talked to people about it and they're like, what? Someone pays you a fee to buy a property? It's like, yeah, well, that's what we do. We're buying properties that are below market value and building profit in them. So nowadays there's a wash of experts and gurus out there, which we'll get into shortly. However, what is the normal role of a buyer's agent, and how can they help you and how can they assist you in building a property portfolio? Generally, a buyer's agent is there to represent the buyer. Most buyer's agents, from what I understand out there, back in the space when we first started the business back in 2009, there was probably 3 or 4 buyer's agencies in the marketplace, and now there's technically literally thousands of them, and every day I'm hearing about some new guru that's out there trying to flog their wares, and always question what their background is, what their motive is, and how they what they're trying to do. So basically, most buyer's agents will take orders. So you can come in and say, look, I'm looking for a 3-bedroom house, high side of the street, one on a quiet cul-de-sac, whatever the case may be, in a specific school catchment. They can look for an investment property. They can look for a principal place. I primarily work in the investing space and not so much around, people's principal place residence, just due to the fact that when I love looking for bargains and buying these properties at a below market value. So I find that most buyers agents out there sort of take the orders and they go, okay, cool, I'll go and find you that property. They can save you time, energy. They generally, and they should, have their contacts in a given marketplace where they can go and get properties that are off market. A lot of people ask me, how do I buy the bargains out there? I used to spend about 8 to 10 hours a day researching properties. I still do sometimes. Generally, my weekends, I spend probably 5 hours or so on the weekend just seeing all the new stock that's out there. Sometimes of an evening, I'll go and check out to see what stock's in the marketplace. But very different nowadays is that I have real estate agents that work on my behalf, and because I've got good relationships with them, I've got about 27,000 real estate agents in my network that I contact. So when a property comes up for sale, before it hits the market, I get first rights to it. Generally, a good buyer's agent will have a handful of those sort of agents. Generally, they work in some specific sort of areas. They're there to negotiate on your behalf. What you've got to look at is, if you're dealing with a buyer's agent, what is their negotiation skill like? Are they going to save you 5%, 10%, 15%, 20% of the property price and save you that amount, or are they just purely an order taker? Some buyers agents will, or most buyers agents will actually meet with you. They'll sit down, they'll go, cool, we'll go find you that house. They'll take you on like a little tour. They might put you in their car. They might take you out to show you some properties, ask you their feedback, have a coffee, talk about it, all that sort of stuff. And that's typically what a buyer's agent will do. I'm very different to normal buyer's agents, so I'll get to that shortly. Basically, the buyer's agents will go and, like, you're employing them to act on your behalf to get you what you want. So you're employing someone, you're outsourcing that to get a property purchased. Generally, they purchase a property for a person. So you ask for I want this house, or I want this unit, or I want to do this. They'll find that property. And there's big differences. I look at, for example, a conveyancer, which doesn't have legal representation for their clients. So you have a lawyer. When it comes to purchase, the lawyer can do a lot more things than a conveyancer. And I see when it comes to buyer's agents, that some buyer's agents have greater skills in that than others do. So looking at what what's going on to my whoops, sorry guys. What a buyer's agent is supposed to do: locate deals and properties on behalf of their, whether it be a first home buyer looking for a property, whether it be an investor looking for a property, whether it be a sophisticated investor. Everybody's a different part of their journey. Negotiate the deals, manage the purchase. Some people, when purchasing a property, they may not have the time, the energy, or the inclination to want to go and deal with the real estate agent. And most real estate agents, and no apologies for those real estates that are on here this evening, if some are watching, real estate agents, like, people don't feel comfortable dealing with them because they're sort of, who trusts the real estate agent sort of thing. Cool. I've just been told that I can bring the questions up. So I'm just going to get the questions from you guys as well, just so I can see. Cool. If you've got questions as well, guys, feel free to flick some questions over for me, so I can chat to you guys as well. So yeah, looking at people being able to save time and effort and energy, rather than having to go to open homes every week, go and look at auctions. A buyer's agent should be a trained negotiator to be able to represent you at an auction. They need to be registered, similar to a real estate agent, to be able to act on your behalf at auctions and all that sort of stuff as well. Generally, you're paying for the real estate agent's network to be able to tap into their resources, their contacts in the industry, and you're paying for their expertise. Sometimes I can find a property the first day for someone, and sometimes it may take a week, a month, sometimes even 6 months to buy a property. Just making sure that we're getting the right sort of asset selection there. basically, a buyer's agent is a trained professional negotiator to act on your behalf. And there's every buyer's agent want to be asking sort of questions on how they're going to be able to help you get to where you want to be. Also looking at the back end of the deal and sort of negotiating, sort of managing that sale process, because it can be daunting. Probably half of my investors are first-time buyers when I meet them, and most of my investors, over the course of the last sort of 11, 12 years, largest portfolios around 70 to 80 properties in their portfolio. On average, it's around 10, 15 properties in their portfolio. Whether you're starting off with 0 properties today or whether you're starting off with 1 or 2, everyone's on a different journey and everybody's goals are different. So looking at, in a world when you're dealing with property and assets and all that sort of stuff, there's a lot of sort of scammers and spruikers out there and whatnot. I'm seeing more and more of that in hotter markets. I love when there's difficult markets out there, because that's where you see the counterfeits and all that sort of fall off the side, and people get themselves in trouble. I've seen no end of, since my time being in the market, working as a buyer's agent, and sort of probably the biggest things I take from doing what we do is that we sort of pioneered this space for obviously cool people to be out there and for the industry, but there's a lot of sort of scammers and spruikers out there that you've got to watch out for. So how can you spot a difference between a legitimate company and a spruiker? You need to be looking a little bit into the people. So are they coming here with some flashed watch, some nice suit? They might drive a cool car, whatever the case may be. What is the further substance from? Because ultimately, if you're being guided by these people, that's going to be representation of what your portfolio will look like, and your ultimately end position will look like. So some of the things you need to know is who is the person that's behind, who is the company that's behind your success, right? If you're employing a company, how many other people have they been able to help out? Can you see testimonies of those people? Can you see the properties of those people? Can you have a bit of an understanding, ask them questions as to what is your track record? Because let me tell you, over the course of the last sort of like 3 to 4 years, there's actually been people out there making these courses on how to be a buyer's agent. When I purchase properties on behalf of my investors, I put together a cash flow sheet, RP data report, and my investors can see how the property will look for them. You can look at recent sales, other properties currently in the market, look at all the numbers to see from a financial aspect, how will that property benefit me? How's the property going to help me get to my end goal? Is it going to be positive cash flow? Is it going to be negative cash flow? And have a very quick look at that. There's a lot of sort of courses out there now on how to become an expert and earn yourself an income by being a buyer's agent. These people that are out there in the space, they may own no property. They may have been a internet marketer 6 months ago, and now they're a property guru, promoting their wares, making some flashy websites, some cool marketing. What is the background of the people that you're dealing with? What is their agenda when dealing with the people? How are they going to be able to help you reach your goals? These are questions that you should be asking. Ultimately, how's the person getting paid for doing their job? There's some companies out there which will bring a property to the table. I always love when I speak to someone and they go, oh, I've got a friend that does what you do. And it's like, every time they say that, I'm like, tell me more about that, right? You've got a friend that does what I do. I want to hear about this, because there's not many people out there that have 200 properties in their portfolio. There's not many people out there that are sort of building large-scale property portfolios. When I dig a little bit deeper, they sell properties, they get paid for selling off the planned property. There's so many of these gurus that are talking similar to how I talk, but the results are very different. If you're buying a brand new property and you're not paying a buyer's agency fee, generally the person that's selling it to you, they're purely selling you a property on that occasion. They're getting paid sort of 30, 40, 50, 60, 70 grand in some instances. And I constantly have these sort of companies that come to me and say, hey, do you want to sell some stock? We'll pay you a big commission, etc. I don't represent those people. That's not what I do. I represent my owners, my investors, to help them reach their goals by buying the right assets that are below market value with upside for capital growth and a strong cash flow. The other thing to look at is that you want to know what is the clear path for you to be able to reach your goals. So, what are your goals? Where are you starting from? How is the person going to help you reach those goals? Is there other people that are in the same sort of position as you that you can speak to? Can you pick up the phone to one of their clients or 5 of their clients and say, hey, look, how was your experience? How did you meet them? All those sorts of things. So you want to know that there's a track record there of being able to, get the result that you're looking for. Whenever I buy a property, whenever I get a loan, whenever I do my tax return, whenever I do anything in my decision-making process, I always question myself. I've just got a question here, a note that says that the sound is gone. Can everyone hear okay? I can see on my side that it shows that the sound is fine. If you guys can just let me know that you can hear okay, that'd be great. Yeah, cool. Kevin, I don't know why, but everyone else is saying they can hear. So yeah, with it, I always think to myself, if I'm taking an action, how is that action going to get me closer to where I want to be? Or how could it be of a risk and take me further away from where I want to be? I see people come to me and they say, oh, I want to be retired in 5 years' time, and they might come in and they've gone, okay, I've bought these 2 properties, and it's like, well, how are those properties ever going to get you to your end goals, right? Are the people that you're dealing with out there, like the spruiker, are they trying to understand where you're going, giving you clarity as to how to get there, right? There's lots and lots of people out there that want to take your money in this industry. Unfortunately, it was something that, when I started it, there was no one out there. Now there's everybody that's in this, in this room that goes, oh, I'm a property guru, etc. And I think maybe from the knockabout way that I talk about things, people think it's very easy. And then the next big guru, and I often laugh because I'm like, I've had investors that have helped out, and then next minute they say they're a guru, and it's like you've never even bought a property yet yourself. You wouldn't know how to negotiate with a real estate agent, or they'll just try and reproduce what worked for themselves. But it's not a one size fits all for everybody. Everybody's goals are different, and I'll get on to a little bit about that later as to some sort of scenarios of people that have been able to use property investing and been able to use and utilize our services on how to be able to, reach their goals. So just click on here. Why are there so many buyers agents out there nowadays? And in comparison to how there was when we first started this business. So as I said before, and I touched on, there's courses literally on how to become a buyer's agent. And I don't mean you go and help a client in this way, shape, or form. They're basically out of the box on how to talk lingo, on how to be able to become a buyer's agent. They're just order takers and whatnot. You want to know what is the skill set that you're acquiring from using a buyer's agent. What is their experience in negotiation? Have they done any qualifications in negotiation? Have they done any training in negotiation? What is the deal flow like they've done? What is their networks like? Maybe asking for a few examples of some deals as to what they've done in the past and how that's been able to help. So experience is the thing that I think is lacking the most out there in the marketplace. What separates B.Invested and property investment agents from the average buyer's agent out there? First and foremost, everyone that I work with closely is dealing directly with myself. I am the sole buyer's agent, should you call it, in my firm. I've helped out over 10,000 property transactions, so big long track history. Purchased properties as cheap as $1,000 out there. The average sort of prices I pick up in Sydney, like 250 to 300. Brisbane, 120 to 180, 200 grand. Gold Coast, pick up stuff like 180 to 250, rent for 400 a week, pick up in all states, all around the country. I've got some properties I'll share with you, some examples of what I'll pick up a little bit later. But the biggest thing that sets, I guess, my firm and all the other buyers agencies that are out there in the marketplace is I run my office as a family office. I'm not a financial advisor, but I think I do a better job than a financial advisor. As far as my team goes, I've got about 100 staff in my team. In my head office in Sydney, I've got about 40 staff there alone, all different backgrounds. I've got staff in my office that have got 20 plus property portfolios, which, utilizing the processes and systems of how I've built my property portfolio, they've been able to replicate the success. I've seen people in my office that have worked for me and been a part of the business with 70, 80 properties. One even had 90 properties in their portfolio. You don't get double-digit property portfolios easy. Nothing in life worthwhile is ever easy, and building a large property portfolio isn't easy. And my team of, from all different walks of life, whether it be from finance, whether it be from legal, whether it be from structuring, whether it be from planning, whether it be from accounting, I've got all the experts in the B.Invested group of companies to be able to deliver the results. Every one of my staff, when they talk to you, you might get different feedback from them, and it's because it's independent sort of feedback and advice that gets given. But ultimately, from my perspective and how I run things differently, is I always want to know, what are your goals? What are you trying to achieve? Where are you now? Maybe if people want to play a little game here, get your question box ready. Yeah. How would someone get to Perth? Could you just message through? How would someone get to Perth? Maybe if you can just type it in your question box. How would someone get to Perth? Just as a random question. No one's answering me. I've got drive, yeah. Plan their trip, fly. Am I in Perth? Fly. I know that some people are cheating in here. Stephen said, well, I'm already here. Someone said scuba dive. Anyone got any other suggestions on how someone would get to Perth? No other question? No other suggestions? Well, the reality of it is that you need to work out, where is that Perth, right? Where is the destination of where we're going? Sometimes when I speak to people, and I just saw here that Steve said, I'm already here in Perth, right? You wouldn't need to go anywhere. You may be not in Perth CBD, so you might need to catch a car there, or a bus, or a train. Some people are starting off in Sydney. Some people are in Melbourne, right? I won't touch on Melbourne too much there because it's a bit of a sensitive subject. No one's going anywhere in Melbourne at the moment. Someone's got to be a bit playful, so apologies to people, not trying to be offensive. If you're starting from New Zealand, it would be different. So if we were in Sydney trying to get to Perth, we could fly, we could drive, we could ride a camel, we could ride a push bike, catch a truck, Uber it, multiple different options of how to get there. If you're in New Zealand, you can't drive to Perth, right? So your options are more minimal. But even if you are leaving from Sydney to get to Perth, a plane isn't going to be the only vehicle that you need to get you from the start to the finish goal. You need to have multiple different vehicles. So you might need an Uber to the train station, a train to the airport, the plane from the airport to Perth, and then from Perth, you might need to catch a hire car to get to where it is actually in Perth that you want to go to. So you may need different vehicles at different times. You may need different, if you give someone in New Zealand a car to get to Perth, they ain't going to get there unless they drown in the ocean by driving off a cliff, right? So everybody's position is different. And I think it's important to make sure that, you're purchasing and acquiring assets that are in line with your goals. They're going to help you move forward along the way. I run my office like a family office. There's an ATO statistic out there of less than 17,000 people that own 6 or more properties in their portfolio. We live in a country of 25 million people out there. 17,000 people there's been less people with coronavirus in the market, let alone people that have double-digit property portfolios. So it's a very small percentage of the population, less than 0.001% of the population have 6 or more properties in their portfolio. And the thing that I get excited about is that at B.Invested, we've probably played a role in probably half of those people in some capacity reaching their goals and getting into the 0.001% of Australians. So things that I do are very different. I'm not a financial advisor. If I was a financial advisor, I wouldn't be able to talk so fluidly and being so open and being able to just say things so candidly as I do. I'd have to put disclaimers on everything, even worse than what I do by saying I'm not a financial advisor. So I run my office as a family office. I do it so in order to help my investors reach their goals. I am not the buyer's agent guy that's going to meet with you 3 times a day, take you out for coffee, talk about what your concerns are, etc. I build property portfolios. I'm focused on building large-scale property portfolios. There may be other buyers agents that are out there to, catch up and have cheap drinks with and be your mate. But from an aspect of building those portfolios, I know that I have. If I ever get stuck on anything, I've got so many people that that are that have confidence in what we've been able to do because they've got awesome property portfolios that'll be able to do anything. They'll be like, yeah, Nathan, cool, I'll come pick you up from Queensland at the moment if you need help, right? So that's, what gives me a lot of confidence in life is being able to see people get their results and, be able to share those journeys with them. That's what I focus on is running my office like a family office. So I just got to get a drink from talking so much. There's water in here, everyone. Sometimes people ask me, is it vodka I drink in the cup? No, I just naturally am crazy. So yeah, what I do before working with anybody is I make sure that I work out what are your goals. For anyone that works one-on-one with me, they have access to my phone number. They can call me whenever. I've got people texting me now. And I work one-on-one very closely with them to help them sort of reach their goals. And I need to know at the start, I won't just go and find a property. If I post out there, yeah, here's a deal that I just picked up, 20 grand, 50 grand, 100 grand, whatever. But I won't just take someone and say, hey, buy a deal, because I need to make sure that property is going to help you get close to your goals rather than take you further away. I'll go without mentioning any names here today. There was someone that I went to help out many, many years ago. The person is very successful with their property journey now. They have lots and lots of properties. But when I met this person, they had about 200 grand cash savings to build their portfolio. I asked this person, not saying it's a he, not saying it's a she, asked this person, what are your goals? And the answer was, I want to get to $250,000 passive income. And I was like, okay, cool. And they said to ask him, how do you intend on getting there? And this person had said to me, I want to buy 2 houses in Western Sydney for 350 grand. And I was like, okay, cool. So how are these 2 houses going to help you get to your goals? And this person said, oh, well, I could potentially subdivide one day, maybe renovate them, maybe a developer will come in. I could potentially add a granny flat and, one day sell it for a lot of money. I was like, okay, cool, right? The words that I heard from that conversation were hopefully, potentially, maybe, and one day, but I didn't have, any sort of understanding as to how the properties were specifically going to get the person there. So this person had 200 grand, wanted to get to 250K a year passive income, and was starting from a zero base. These properties were negative $15,000 each for this person. I said, so you're going to try and get to 250 grand a year, but you're going to be going negative about $30,000 a year by buying these 2 properties. I don't understand how that's going to help you reach your goals. And this person went, oh shit, right? I suggested the person go buy 4 properties in the 12 months following. Within 3 months, that person had bought their first property and bought 4 properties within a month, which was really cool. The person ended up going on and buying a property every month for maybe the next 2 years in their portfolio and ended up with a very, very large property portfolio and now is retired. And, the thing that's important is working out how's the property going to serve you to get you from where you are to where you want to be? It's always talk about how do you get to Perth. You need to work out where you're starting from. Some people are already in Perth. I speak to probably about 7 or 8 people a day, giving them strategy and working out, where their goals are and reviewing their goals, reviewing their positions to help them reach their goals. Some people, when I speak to them, I'm like, you're already there. You don't need to go anywhere. You're already at financially where you want to be. They may be able to tweak something, redefine their position to move forward, but there's not much they need to do. Some people need a whole lot of work before they can get started. So looking at, what is different between, B.Invested and property investment agents, which is my buyer's agency service, to other buyer's agents, is that they'll just do what you ask them to do. I want to buy a property. Can you get me a property? I want a property that does this, this, this. I can get properties at any price spectrum. I've got a deal that just went through at $5.6 million. I've got 5 properties that just went through. The last one went through today at $14,000 block of land. So I've got some units I'm going to share with you that I've just secured, which were off market for 50 grand. They used to sell for 130 grand. So the deals are great. I don't work with emotions with people. I work with logic, work out, what is the goal? How can I best serve you? And draw a plan of attack in order to be able to achieve that, which I believe is very different. And obviously, as I always say, I'm not your financial advisor. I actually have my shirt in my car that I was going to wear, which is I'm not your financial advisor. The reason why my shirt's in the car, for those of you that are just tuning in, is because I'm actually in Queensland. I'm heading back to New South Wales this evening, which is where I'm based. Looking at the team that's around and that's here to serve you. As I said beforehand, my team is experienced. Most of them are investors themselves, all come from different walks in life, large property portfolios, people that are starting out in their portfolio and their journey. Most buyer's agents out there have just done a course for $1,000 or whatever it costs to do a course. And then suddenly they're like, I'm a buyer's agent. It's like, well, that's nice, but what are you going to actually deliver? So my team are all sophisticated investors, most of them sort of 6+ properties in their portfolios themselves. And, they're here to, help and assist where they can. I personally locate all the deals for my investors. I negotiate the deals and I present those deals to my investors in line with their goals to best serve them reach their own personal goals there. I think I touched on this before, in 27,000 real estate agents in my network. It isn't just limited to real estate agents. It's administration companies, disposal companies. When bank repossessions go through, these disposal companies actually reach out to me and say, hey, look, I've got a developer that's in the shed. They need to sell off 5 properties. Can you put a buyer on here? I'll be able to get it for you for 30% cheaper. Be able to get it for 20% cheaper. I was actually on the phone to a lender the other day. I have a large-scale mortgage brokerage firm where I help people sort of finance their goals and whatnot. And I was on the phone to a lender the other day. They said, look, we're not in the game of repossessing developer stock or repossessing people's properties. We want to sort of assist them because it's not in our benefit to hold properties. And this lender actually wanted to put me in contact with one of the developers. They said they'd get the properties for 25% below market value or below the sale price because it was a discounted distressed seller. So getting access to those sort of deals, you don't find necessarily all these things on realestate.com or Domain. If you don't want to pay a fee, realestate.com is a really good solution because you can just go find the property yourself. But when I'm bringing a property to the table, I always want to know when I send it off to my investor, it's like, hey, this property here, here's recent sales at 500,000. We're picking it up for 300, picking up 350, 400 grand. You're saying yes or no to 100 grand. I was on the phone with one of my investors this afternoon where I picked up a house in Sydney for $383,000. Said to me, oh, the house is a bit older, might need a bit of carpet, might need a bit of paint on it, might need a kitchen renovation. Like, who cares, right? Spend $5 grand on kitchen, $5 grand on bathroom, $5 grand on paint, $5 grand on carpet. There's 20 grand. You're into it for 400. The property 3 doors up is on the market for 530,000. So you're saying yes or no to about 100, maybe $150,000. So, when when you look at the property, you need to be seeing that you're getting value out of the service that you're paying for, and that's what we deliver via the buyer's agency. So a lot of my investors, when I talk about properties that I buy and their portfolios, they're strategically purchased and placed in their portfolio to get them to their end goals. Last year I did a bulk deal of 10 properties in West Sydney. Purchase price was $560,000 for them. I had 2 of my investors that couldn't get lending for the properties, and they're all conjoined. They're called interdependent contracts, which is, we're playing with multiple different factors in the deal. The valuations came in at $662,000 from a valuation perspective. So basically, the investors were saying yes or no to $100,000. And that's on purchase, remember. Like, the banks don't like valuing for more than, they're normally very conservative when valuing. But 2 of the investors couldn't purchase or go through because of the finance, but we found a solution for them to be able to do so. So working out their strategy, working out their position, we were able to accompany these 2 properties. They were able to get a loan for $200,000. They had like 250K cash or equity, but they can only get a loan for $200,000. So 200, 250 plus 200, it's like 400, 450. And the water. 400, 450, but it wouldn't have been able to get them into the deal. So what I was able to do, and how we structured the deal, is that they went on and bought a little cheap unit for $55,000. I think one was 55, one was 59. Rent for $250 and $290 per week. So suddenly, because they bought the property cash outright, they've now got their asset and liability position, and they're looking at, from a cash flow perspective, when the bank assesses their file, they're looking at an extra $13,000 a year cash flow coming into the statement, and that enabled them to borrow another $200,000 and then open them up so they could get the loan to purchase the property. I don't see too many buyers agents out there, experts, gurus out there in the market at the moment, which do look at property investing from that point. And there's a big difference why B.Invested and property investment agents, that my investors end up with large double-digit property portfolios. Moving on to my next slide. Where are we here? Keep the questions. Any questions coming through? Yeah, I've got lots of questions. Someone here just wrote a question, which I think, well, I'm just trying to get the question box a bit bigger so I can see what everyone's typing here. Drive. Danielle, she loves the question. Depends where you're starting from. Car, walk, plane. Why would you want to go to Perth? Driving a car is my main mode of transport. I drive all the time. Scared of airplanes. $18.5 million worth of debt I've got, but I can't hop on an aeroplane. It's all about mindset. It's exciting. How many people have 6 or more properties? I missed the numbers that you said. I said beforehand, for those of you that may have missed, is that as the ATO statistics is that less than 17,000 people in this country have 6 or more investment properties in their portfolio. So out of 25 million people in the population, that's less than 0.001% of the population which have 6 or more properties in their portfolio. So, and we've been, I know single-handedly from my YouTube videos, people that write to me, people I've never even met beforehand, which have got large property portfolios, and thank me from the map sessions that I do. I've done over 6,000 map sessions in the business since we started the business. So I know from looking at the positions that a lot of people out there that they've got, and that's just the ones that I've spoken to. So John, hi Nathan, good seminar, thanks. What is your view on buying 5 properties worth 200,000 each versus buying 1 property worth 1 million? I am going to leave that one there for the moment. I'm going to come back to that shortly for you, John. I'm going to just go to this next couple of slides. I'm going to open up a little bit more for more questions. So, looking at, actually, I'll answer that one now. Looking at, would you buy 5 properties for 200 grand versus 1 property for $1 million? I think ultimately, like a lot of people just look at buying a property or buying, 5 properties. I like to think about it as what is my asset position. If the market was to double tomorrow, would you want to double a property of $1 million into $2 million? Or would you rather have 10 200 grand properties that's $2 million, $2 million turned into 4 million? So if the market was to double, what sort of asset position you will have? So you need to look at what is your asset position going to look like, and what are the properties required in order to get you to that asset position. So if your financial position is to go to Perth, right, and you want to go to financially where Perth is, wherever that is for you, working out where you're starting from, where you're going to, what are the vehicles in order to get there? Do you want to have, you can buy one car, one house. I was going to say one car because we'll talk about the taxis. Right? Would you rather have 1 Lambo or 20 Ford Falcons? I'd rather have 20 Ford Falcons out there Ubering, bring me in cash flow, and then from that cash flow, I can use that to buy myself a Lambo. So when it comes to having a principal place of residence, you can have one house which doesn't bring any income. You've got to personally pay for that mortgage every day, week, month, and year. Or you could have 5 lots of tenants returning you cash flow and they're paying the asset off, right? So it's a very big change in perspective and viewpoint of how you perceive that position. Because yes, one property is one property and the other property could be another property, but how is that property going to fit into your overall strategy? And as I said, I think financial advice, especially on a webinar, but with my investors, they always ask me questions and I'm there to answer them and guide them to where they want to be, and have just, that's why I call it a family office, because, all the wealthy have a family office. My investors want to be wealthy, and, as a family office, you can, just talk about things as they are and be able to help people out. So, I look at what is my net worth position, what is my asset position, what is my cash flow position. I want to constantly know, how can I keep increasing my cash flow? How can I keep increasing my asset position? I was talking to someone about this today on an interview about, did I keep my first investment property? I sold my first investment property to buy my first principal place of residence. So I bought my first property for $248,000 before there was YouTube, before there was Facebook. It was in 2003 in Western Sydney, in a peak of the big boom, the biggest boom that ever occurred. It wasn't just recently, it was a previous one, because these things occur because we won't get onto how money works today. But I purchased this property for $248,000. I sold it for about $440,000, 430 something. And then I used the profit that I made from that to buy my first principal place of residence, which was $1.2 million. That property is now worth about 4 to 5 mil, and I can sell it just as land value for that. And looking at, how I was able to do that. If I went out and bought my principal place of residence from day one, I would not have been able to get halfway to where I was on that property that I bought. I would have had a very lesser of a property as a principal place. It was only due to the fact that I was able to have so many smaller properties that I had more income coming through, I had more equity in my position, I had more growth across my portfolio, and I was able to do so. I bought a large motel that I own. It's a 36-room motel. I had to buy it for $1.665 million cash. You couldn't get a loan for it. When I bought that property, other people couldn't get a loan. I was able to pick it up as a bargain. That was about $40,000 per unit in Sydney. Double brick unit, which I could just chop them off and strata title them and sell them for $100,000, $120,000 each unit now, which would be worth sort of in that 4 or 5 mil sort of price range. If I was to not have my foundation portfolio, a foundation portfolio is really, really crucial. I was able to go and take equity out of that first sort of 10, 15 properties that I'd bought, which I bought this way on in the future, right? So these properties I'm talking about was about 100 properties into my portfolio. I bought this large motel property. If I didn't have the first sort of 10, 20 properties in my portfolio, they'd gone up from 150, 200 grand to 400 grand, 450. And I was able to go back, pull that equity out and use that equity to buy a very strong cash flow property, which was ultimately there to complement my lifestyle. So it's how you structure those properties in your portfolio that's going to determine how you're going to get to your end goal. So hopefully that answers your question. If it doesn't, let's expand on a little bit further. But I'll get back to the slides because I've got a habit of diverging from the topic. So with it, what do you get for your money with using property investment agents and our buyers agency service? Made a few little notes here because I just look at it as everyday sort of stuff that I work with. I don't look at it that you're just paying for a property that I'm securing, right? Yes, I can go, you can pay me, the fee is $12,990 is my buyer's agency fee. You can pay us the $12,900 buyer's agency fee, and I can go buy your property. It's worth $300, you pick it up for $200, you're like, cool, thanks Nathan, you just done that, and we never talk again, right? But how's that property going to get you to retirement? How's that property going to help you reach your goals? How's that property going to fit into the overall strategy of what you're trying to achieve? It's not about a deal, which is very different than a normal buyer's agency. A normal buyer's agency would be like, oh yeah, how can I help you? Oh, tell me. Okay, I'll go find a house like that for you. I'll go find the house with a nice block that you can chop the backyard off, whatever the case may be. I'm looking at, how's the first, second, and third property going to get you the fourth, fifth, and sixth one? I don't look at the property that you can buy today. I'm looking at how you're going to get to the 4 properties after that. How you're going to get to the 6 properties after that. How's it going to help you get to your end goal? And I guess mentoring is a part of that. You're dealing with myself throughout the process in order to help you build that portfolio out. The more successful you are as an investor, the more successful I am as a business person, because you're going to need to use me more and more in order to buy you more and more properties that are going to be making you money. I'll look at the deals that I buy, and I'll show you some just example deals from this year that I've purchased for some of my investors shortly. So you can see how they will sort of fit into a portfolio and help you move forward. But I look at when I'm buying a property that my investors are saying yes or no to 50 grand, right? I've probably got one of the easiest jobs in the world, because when people pay me a fee, they're getting money in return because they're buying a property that's building on wealth. But more so than that, is it a property that's going to help you push forward? How's it going to fit into your portfolio? That's constantly what I'm looking at. So mentoring and nurturing, your portfolio and holding your hand along the way. I negotiate deals hard. A lot of people say they've never seen someone negotiate like you do. One of my mates said to me, it's like when they see a real estate agent, that it's like, oh, hey, Nathan, how you going? And then he asks them for their suit, because real estate agents all wear suits. It's like he asks them for their suit. They go, here you go, you can have my suit. They're sitting there naked. They go, okay, cool. And then they go, hey, you look like you're feeling cold, and he sells the suit back to them, right? When the deal goes through, the agents are meant to be working for the owner of the property, but ultimately, I'm getting the deals because I'm building those relationships and getting those properties that are so far below market value that's enabling you to, continue building that portfolio. So negotiations really, really big key. Looking at the equity that you're making when buying the property, as I said, you could be saying yes or no to 50 or 100 grand. You guys decide that as an investor using my services. If you don't feel that you're getting the money, you say, no, I don't want to do the deal. If you want to do the deal, you say yes, you do the deal, you make the cash, you build that portfolio up. So I guess ultimately, what is that portfolio going to look like for you? Most of my investors, I'd probably say, if I was to profile my investors, I probably have maybe like 30 to 40% of them would be first home buyers, sort of 18 to 35, buying their first property, and then they end up buying 2, 3, 4, 5 properties and getting a large portfolio, and then buying the principal place. Maybe like 30, 40%, owner occupiers, mums and dads that are out there that have got a portfolio, have got a house but don't have any investment properties, and they want to build a property portfolio. So work out a strategy for them. Maybe 10% are sophisticated investors already, which already have sort of 10 properties, 5 properties in their portfolio. So it's only a small amount of those investors that come by and want to utilize my services. But those guys want to take it from that level to getting them from having a few properties in their portfolio to be able to get financially independent and retire. And then there's some other people with different weird sort of positions. Some of them want to buy properties inside their super fund, which will help people structure their super fund. If we look in 2020, I called this time a GFD, which is a global financial depression, which I talked about 2 years ago when everyone thought it was crazy. But a lot of people this year have gone, look, my super fund has lost 30% in February. What do I do? How can I protect myself? A lot of people have gone and moved their funds from wherever they don't know their money is into self-managed super fund. And I help people purchase properties within their self-managed super fund. So it's something that it's not just purely under your personal name. A lot of people come to us and go, okay, I don't think I can do anything. I'm screwed up. My position's not good. And it's like, hang on a second. Your position is actually very excellent, but you just haven't thought about that position too well to reach your goals. So that's where I help out. You've got access to someone that has over 200 properties. You have access to a team of other investors. I like to think the B.Invested community is a community. As I said, water going. As I said, my team have great levels of expertise in their relevant fields. I've got a company called Zinger Finance, which helps people finance their portfolios. And my personal broker heads up that team. Her name's Rose. And she's been my personal broker for 15 years, done about 80% of my lending, of my loans on my portfolio. So she knows a thing or two about structuring loans, structuring debt. I've been a part of those investors' portfolios as well. Plus I have a full team there of staff. It doesn't matter what area of your portfolio or journey that I can help you with, that's the team that you get to tap into and use as well. So on that, if you've got questions, just pop them in the question box and I will answer them for you shortly. I'm going to get into some of my investors' portfolios and look at some of the deals that I've been doing. So a lot of people think that I just purchased in Sydney or purchased in Brisbane or Gold Coast. I've purchased nationally. A lot of people don't realise what Nathan's really up to out there in the marketplace. But I go into markets before they move. I'm a contrarian investor, so I'm purchasing things that are of value. Doesn't matter whether I'm buying houses, doesn't matter whether I'm buying gold bars, doesn't matter whether I'm buying silver, doesn't matter if I'm buying cryptocurrency, doesn't matter if I'm buying whatever sort of product it is in life. I look at cycles and trends and work out sort of when a market's at the bottom once it's oversold and whatnot. And Western Australia has certainly been one of those markets. These units that you can see on the screen here is $55,000. This is a 2-bedroom unit. I picked up 8 of these things for my investment, maybe 9. Yeah, 9. I don't know how many of them I picked up here so far. I've got them all off market. Comparable sales in the current market for sale at 130. So, someone's buying that, they're saying yes or no to 50 grand on doing that deal. Rent on it's $200 per week, and that's sort of like a 20% yield on one's investment. So yeah, just one sort of example. Property here in Queensland. I just purchased this for one of my investors for $162,000. It revalued the day after settlement for $210,000. I personally own in the same complex and rents for $300 per week. So this property was able to pull the equity out, and my investor was able to use that equity to redeploy into another deal. And then when they were able to do that, They want to go from 1 to 2, 2 to 3, 3 to 4, and be able to reach their goals. So coming back to what I was saying beforehand is like, how is that property going to help you? How is the deal going to help you get to where you want to be? And then it's like, do you want to have a, so just have another little drink. How couldn't just a normal person, like most of my investors going back to whether it be a first homeowner or my mum and dad investors with their first principal place and then wanting to build a portfolio, these are people that are on sort of 50 grand, 60 grand, 80 grand, 120 grand, income of the whole household at 150 grand. These aren't big sort of incomes. These are just everyday people. You know, they can buy one property now cash, they can buy another one in 6 months' time using equity, and be able to build out that portfolio from there. So these are sort of assets that enable people to be able to do that. Here we are looking at a property which I just purchased for one of my investors in Brisbane. Like this property is in Brisbane, $138,000. Revaluation of $180,000, and rent on it for $260 per week. This here is a modern townhouse which purchased for $260, revalued it recently for $310, rents for $380. It has depreciation as a bonus. I don't look at tax deductions. You've probably seen from my presentation this evening. I don't talk about, hey, buy this property, get a tax deductions. A lot of spruikers will promote negative gearing, tax depreciation, tax benefits. A lot of spruikers and dodgy people out there will say, oh, this property is positive cash flow. All these properties that I show you will be positive cash flow, but you've got to take into consideration council rates, water rates, strata fees, insurances, real estate agents' fees, all of the costs of truly owning that asset and making sure that it's going to help you financially get to your end goal. Is it going to give you $50 a week? You could have 10 properties that give you $50 a week. That's $500 a week. That's 26 grand a year. That could be a day that you don't have to go to work, 2 days a week you don't have to work. Your spouse may not have to go to work after having children. You want to build cash flow that supports your lifestyle. So I'm all about personal liberty and freedom. The big motto of B.Invested is telling your boss where to go and living life on your terms. I think the assets need to reflect what the goal is in your portfolio. And these sort of properties are these are just some examples. So this isn't what a portfolio would look like. It's just a couple of examples of things that have happened in the last month or two. This property here is in Sydney, 2-bedroom unit. Previous sales in there, it shouldn't say valuation, it should say previous sales at the 350 grand price range. Rents for $320 per week. These things here are renting for about $360 at the peak of the market. Yeah. This property here is in inner west Sydney. Purchase price was $488,000. This is for a first homeowner. I just recently did a video out of this property. $488,000. Revaluation, there's one in there for sale for $680,000 or $690,000 currently. Rent on it, it's not rented because it's own occupied, but it would rent for $450 per week roughly. That was an easy yes or no to $150,000 by buying that property. So they're not all little cheap, shitty properties in the back of sort of whoop or anything like that. They are inner city properties across the nation. Buy in every state. This property here is in Sydney, like in Sydney. You can't get close, or you can get closer to Sydney, but it's right in the heart of Sydney. This was a bulk deal that I did. Purchased the whole block for $3 million. $3 million for the whole, or $2.8 million for the whole block of 6. This one here on purchase valued up at $650,000. I actually have one of these available, so if someone wants something like this, I'm going to have to take one of people off from finance perspective so I can get you this. These are off-market sort of deals. Yeah, so they're just a few examples of sorts of properties. There was other properties I was going to have in this slide deck, but just given the fact that I'm not in my office and haven't got access to everything. I'm in my office, but I'm in my Queensland office at the moment. I've picked up some properties for like $10,000 this year. One was 13,000 plus GST, so 14,300. The council rates came back for that, and the UCV, which is the council valuation, came in at like $28,000 or $27,000. So it's almost double the council valuation than what the prices that we purchased the property for. And go and sort of look at any property that you buy, and the council valuation and the actual valuation is very, very different. I pick up large blocks of units for people. I've picked up recently a block of units for 400,000, rents for about $800 per week. These things in the peak of the market were for sale for $1.5 million, and rents on them were about $2,000 per week. There's lots and lots of weird and wacky properties that I've purchased. I purchased more properties than anyone in the country, hand on chest. I reckon I'll probably do more deals in a year than probably half the agents out there combined do, just due to the amount of access to stock that I get access to, and the cherry picking that I do in the marketplace. I want to make sure I'm getting the best of the best properties that are below market value. My whole principle about buying properties is they have to be below market value, have to have upside for capital growth, and have to have a strong cash flow to help support your goals to get you to where you want to be. So yeah, I've got some real beautiful stories of some people from this year as well. Just got my little notes here. We've got some really beautiful stories of people that have been able to pull out equity. I've got more investors in 2020 than I've probably had in any year of business until this year. I've seen more investors start off this year and build out their portfolio. I've seen more investors go from 0 to 4+ properties in their portfolio this year than ever beforehand. I've seen more investors get to 10+ properties in this year than any other year in business over the course of the last 11 years. So if you're scared about this current market, the market is actually moving because there's a shift that's happening. When you use my services, it's not just about buying a property, as I said beforehand. If it's about buying a property, I look at my investors' portfolios. My investors' portfolios are a reflection of the actions that I do. So if they have a shit portfolio, it's going to be a representation of my actions for them to have a shit portfolio. If it's going to be a good portfolio, there's going to be a reflection of those actions. So looking at at the cool stories that I've seen out there, there's been more people having those large portfolios this year. But I look deeper than just the property investing aspect. I research all financial markets. I hardly ever sleep. I sleep for maybe 4 to 5 hours a day if I'm lucky. I research all different financial markets, whether it be the Dow Jones in the US, whether it be crypto, metal, whether it be prognostication into future of currencies. One of my biggest hobbies is understanding different currencies and how they work, the debt and death paradigm that we work in, and how debt, our currency that we use. I saw like empty my pocket before. These notes that we use, debt notes, they're not backed by anything. If we look at these coins, it's a gold $1 coin and a silver 50-cent piece. They're not silver or gold, they're just representations, mere representations of what it used to look like. Just like in the Matrix, how the food isn't what it is, our currency isn't. I understand these markets more than anybody out there. I'll put some weird stuff out that people don't understand it, but I know what's about to come next at any turn in the marketplace. And that's sort of what drives my investing journey, what navigates me into different markets. And obviously, like for my investors working, in my family office style, buyer's agency, that's what you're tapping into. So how I see the market being shaken up and how I see the opportunities and taking advantage of them in the next 12 months, I'm going to go into now. A lot of the things that I'm seeing out there, there's a flight to safety from people's funds. So back in 2009, the GFC, there's a few bad actors out there, a few bad businesses, some businesses went bankrupt, people went bankrupt, a few people went to jail. That was about it. here in 2020. I said in 2018 that we're going to see countries go insolvent, we're going to see corporations go insolvent but get bailed out, and we're going to see currencies die. All our currencies, which is why I'm talking about this, are going to zero. Looking at people looking for a flight to safety, debt becomes irrelevant with inflation. And I don't want to go too deep into that today, but just it's a theory of mine and it's very true. And it's very evident that's what's happened over the course of the last 49 years in our current monetary system, is that the currency keeps dying, and it's not the assets are going up, it's the money that you're buying with is buying you less, so you need more money. So a lot of people are bailing from the supermarket, the super fund market, not the supermarket, but they're doing that in some places. There's people looking for yield out there in the marketplace. I've seen everything under about the $250,000 to $300,000 price range in 2020. A big boom coming into that market. We've got interest rates that are 0.25%. Back in 2008, before the GFC, it was 7.25%. Every time there's been a financial crash, everyone was asking me 2 years ago, Nathan, why are you excited about a crash, right? It wouldn't be good to have a crash. I'm like, yes, bring the freaking crash on, because what we're going to see is so much stimulus checks, money being printed, currency creation that's ultimately going to devalue the worth of this currency and push us into a point where all the asset prices rise. And we're going to see that in the not too distant future. People are looking for yield. There's people looking for opportunities of somewhere to park their cash. Property has been propped up in many different ways, whether it be stamp duty manipulation, whether it be interest rate and currency manipulation, whether it be stimulus packages that are being installed in the property, whether it be the people looking for security in the market instead of having a paper asset like shares or whatever, and that market tanking. There's many things that are pushing up the market. Some of the opportunities that I'm being very aggressive in is bulk deals, because people can't get the finance. Not everyone can get the finance to do them. So I go out there and purchase properties at a discounted rate in bulk to be able to buy them below market value. I buy properties that are just below market value, just for the sake of buying them below market value, whether on market, on market or off market. A lot of the properties that I buy don't even hit the market. They're off market, or I control the real estate agent and they might have to put the ad up there for a day or two, but I've got the property controlled before the ad goes up online. My networks is something that I'm capitalizing. There's a lot of hungry real estate agents out there, but there also is a lot of buyers out there in the market as well. The fact of where we're at in the market cycle, I called a market correction back in 2017. We saw it. The market bottomed in most states and capital cities in and around June 2019, and we've seen the market starting to recover until Corona at the start of 2020, and we've seen so much more money thrown in the market. Let's say there's 10 people at the table, right? Let's just say there's 10 people at this table that I'm at, and they all have $20 each. Right? So 10 people, $20, is $200 in circulation in this room. If someone wants to buy a glass of water and there's 10 cups of water, people will be like, okay, I'll give you $10 for a cup, $20 for a cup of water. Everyone, that velocity of the currency goes around the table. If someone comes in and goes, here's a box of 100 $20 notes, that means everybody's now got $200. Am I going to accept for this one cup of water $20 when there's 100 times more that in the room? $2,000. I'm going to be wanting more money for this, and then the price of that will rise in value. That's what's happening out there in the market at the moment. It's a very, very exciting time out there in the market, and I'm so glad and excited to be alive to be able to experience this sort of shift in humanity and in consciousness of people, being able to jump on top of these things. So that is, some of the areas of where I'm wanting to shake up the market. This year's probably been the busiest year ever as this organisation's grown and the community's grown. So I just want to thank everyone for that. And on that note, want to leave it for some questions and answers. I can see that you guys have some questions there, so ask through any questions that you do have. But yeah, it's all about building large sustainable property portfolios. So yeah, I wouldn't have been able to be in this position to quit my job back in 2009 if I didn't have property as a part of my portfolio. When I quit my job, I had about $35,000 a year, about 30 grand a year, sorry, income coming through, about 600 bucks a week worth of income per week coming through. And then I increased that from 30,000 to 80,000, and I got to about $500,000 worth of positive income. And then I realized, you know, I just want to keep growing my asset base. So I bought some other sort of development stock and land banking stock, which is in line with my goals. My next goal is to be a billionaire by the age of 40. I said that in 2000 and back in 2015 when I was 30 years old. And am I on track for that? I believe so. And you know, it's an exciting time. Everybody's goals are different. Just because I'm at one part of my portfolio, you might be at a different part of your portfolio. Your friend, your family, your neighbor, whoever is in a different part of their portfolio, doesn't mean that there's not actions that you can be taking at every step along the way to get yourself closer to where you want to be. So, questions. My mouse is being a bit weird here. What do you think of boarding houses and rooming houses? Good question. I'm not a big fan of them. Generally, when you're getting boarding houses and rooming houses in your portfolio, you're getting a more of a lower socioeconomic sort of tenant. So if a tenant can pay $200 for a room, but they can't pay $250 for a unit or a house in the area, or $280, you're getting like a very interesting level of tenant. So a lot of riffraff, a lot more sort of wear and tear on the property, a lot more decline in asset value. The insurance becomes an issue. If there's a fire in the property, it becomes an issue. A lot more risks occur. And then what are you trying to actually get from doing that? Like, is it cash flow you're looking for? You can buy properties that give you good, strong, solid, positive cash flow. I always get asked from people, should I build a granny flat into a backyard of a property? And I always ask, like, what is a granny flat going to do? Why would you be building a granny flat in your backyard? From building a granny flat in the backyard of your property, you might cost you $100,000 to build such granny flat. You could go out there and purchase a new asset for $100,000. It's going to bring you a greater cash flow return. Plus, you've got the asset appreciation as well as the cash flow appreciation. So, yeah, I'm not a big fan of boarding houses and rooming houses. If it's done right, that can be cool. I've got quite a lot of motels in my portfolio. The breakdown of my portfolio at the start was 100% houses for the first sort of 6 or 7 properties. Then I went into townhouses and villas. Then there was a point where I had about 70% townhouse unit villas and about 30% houses. Now I've got probably about 50% townhouse units and villas, maybe about 25% houses. And the other 25% would be some weird stuff, so motels, shopping centres, agricultural land, and stuff like that. And those properties that I've got in that category, I have maybe like 3 or 4 motel type style properties, and they generally bring a certain caliber of tenant if you're renting them for a long-term accommodation, and causes trouble sometimes. So it's just my personal experience in that front, but it's not saying that you shouldn't do it. It's not saying that it's bad. It's just my personal view on it, and it's just, yeah. Stephen said rooms for rent. I don't understand. Maybe if you could elaborate, that'd be a bit greater on that. But if it's referring, it could be very similar to the answer I just gave. Question here from Nathan. Hey Nathan, have you ever purchased a property with the tenants and the agent telling you they are on week-to-week lease? Then after cooling off period, you find out that they are fixed leased, but contract was for a vacant property. That's probably more of a legal question on that front. If they're on a lease or if they're in a property, what's the sort of deterrent? Are you going to be moving into the property or not? Ultimately, what the contract has within inside of it. There's actually a clause within the contract, and it says that you're buying the property as is, as per the contract. You can't rely on anything the real estate agent has said to you. There's actually a clause in the contract that says that, so you have to rely on your own research into the property and as per the terms of the contract. So you could possibly, without giving legal advice on this, you could possibly pull out of that property because it's not itemized in the contract, potentially, or you might just have to take it as it is. So that could be a question. If you do want to take this offline, I could possibly get Stephen Sidorowski, which is my principal lawyer over at Zenith Legal, which is my law firm, to have a chat to you and have a look at your position and see what he can do. One other thing that I forgot about throughout the presentation, I should touch more on it. It was on one of my slides, but because I didn't have it in front of me on my screen, it's a bit more difficult. The negotiation doesn't stop on the day that the property goes into contract. It continues throughout the whole course of that purchase. So all the way up until settlement day, I still try to negotiate the property. So what I mean by that is that if it's a pest and building issue, every time I buy a property, I'll go back to the real estate agent and say, hey, look, my investor is very scared. They want to pull out. I'm trying to keep the deal together. They want to pull out. If it doesn't go through, I won't make money, you won't make money. Let's try and keep it together. I think I can keep the buyer together if we can get a $3,000 or $4,000 price reduction on the property. Are you able to go back to the owner and see if we can do that? And the agent may or may not come back. So just by asking that question, there's a chance they could say yes, a chance they could tell me to piss off, and there's a chance that we could go, okay, no, but we'll meet you at $2,000. That phone conversation could get $2,000, $4,000, $3,000 worth of reduction for you. So I always go back, no matter what, and try and chip away at getting that property cheaper and cheaper and cheaper and cheaper. So the settlement, the negotiation shouldn't end the day that you sign the contract, but more so the day that you settle the property. So that could be a good opportunity there for you to go back and actually try and renegotiate if you could, if you have a leg to stand on when it comes to legal. So yeah, happy to help out and speak to Steve Sidorowski, the lawyer, if that would help you out. Ben, are Zinger Finance a broker or do they do lending? We actually have some white label products. So for those of you that are here that don't know what Zinger Finance is, Zinger Finance is my finance firm where I have finance strategists and brokers which help people sort of fund their portfolio. We don't actually lend the money ourselves, but we do have a white label product, which is our own financing, which we can get for you. We have access to all different lenders and all different types of strategy. We have some short-term lending options. We've got some commercial lending options where you can get properties without, like the normal sort of rigmarole of going to the bank and asking for that sort of stuff. So if you do want out of the box sort of finance, then happy to help out where we can. So just reach out to my team. Do you factor in anything about land tax? It's a good question. When I'm building my portfolio, my investors' portfolio, a lot of people say, oh, Nathan must pay lots of land tax. I probably pay about $100,000 a year. I think it's about $120,000 last time I calculated, somewhere in and around there, about 100, 120. That's nationally. I structure my portfolio like when I say I pay that, I've got 140,000 square meters of land in Sydney, like in Sydney, not in the CBD, but like in the greater Sydney area, which I can build on that probably 300 houses straight out. So if you do the numbers on that, there's a lot of land there that I could be taxed on, which I plan on building on in the future. But how I structure it, so when I say I pay 100, 120 grand a year in land tax, that's across 200 property portfolio. So I structure my my portfolio correctly to try and reduce that as much as I can throughout many different trusts. But I only did trust when I got over a certain level of properties. So after about 25 properties, when I started buying a trust. But the actual asset selection is important. So there's a new threshold for Sydney, for Melbourne, for Brisbane, for Queensland, for Western Australia, for Adelaide. I don't pay land tax in Perth. I don't pay land tax in Adelaide. I pay minimal land tax here in Queensland, but I've got like um, I'm settling on a property in a couple of weeks, which I forgot about. So I bought it about 8 months ago. Um, I purchased this block of land. I've got 20,000 square meters, and I bought 2,000 square meters behind. The reason why I bought 2,000 square meters is that I'm buying to use the easements for water and power and all that sort of stuff. But I pay minimal land tax. I've got lots of large sites and stuff in Queensland and in Brisbane, but they're structured in a certain way to be able to minimise that land tax. So I always try and factor that in, but it's a cost of doing business. Would I avoid doing a deal in order to save some land tax? No. I would still do the deal, but the numbers must work up. Numbers don't lie. Our emotions can lie. People can lie. Real estate agents can lie. And these can be all sort of like detrimental factors in building a portfolio. But yeah, with it, I always factor these costs into purchasing a property. What's the time as well? 8:30. John asks, how do you get around serviceability? Serviceability is always, if it wasn't for finance, I actually talked about this on an interview I did today on camera for someone. How do I get around serviceability issues? If it wasn't for finance, I'd be sitting here saying I've got 2,000 properties, not 200 properties. Finance has always been the hurdle to overcome. However, you can sort of improve your position. So I always look at how the cash flow position stacks up. So for all my investors, when I build their portfolios, it's not just necessarily like these buyers agents as I was talking about beforehand. There's buyers agents out there that never even bought a property. They don't know anything about property. They might have one or two properties. They're buying properties. Oh yeah, I'll get that nice house for you. But if they're only getting you one property, right, and that one property, these are all the guys. If they're buying you a property based on what you want and not what you need, there's a very big difference. So I only buy properties for my investors of what they need. If they want something that's different, then I won't do that for them. I don't want to buy it. I don't want to be a part of. I don't want to be a part of people that are causing, their own financial ruin. I just won't, sort of entertain that. So the properties that I purchase for myself and my investors are there to help them like get to their goals. So do we need each step along the way? We need to be asking ourselves, do we need cash flow to keep the banks happy? Do we need equity to keep the banks happy? I used an example beforehand of how I picked up some properties last year, and I picked up these little units that were very cheap, like 50 grand each. They're not the ones on the screen that I showed beforehand. And someone actually wrote in here there was 9 of them, because I didn't have the exact numbers beforehand. Sometimes I buy a property cash using equity, buy a property cash, and then because you own that property outright, the banks will deem that as normal income, not rental income. And how they structure the debt for you, it helps boost your servicing so you can get around those obstacles of servicing. So if you are stuck from a servicing position, feel free to reach out to my team from a finance perspective, and they'll be able to put you in contact with one of my finance strategists to help you get around that sort of position. John wrote here, different John, you need some vodka in that water. I want the Scotch and dry. Awesome, enjoy it. I want to drive to Sydney as well, so if I have alcohol, I won't be able to drive. Not that I drink much anyway. Why would people sell their property under market value? Good question, Toby. People don't always know what they're selling. So people always ask me, like, why is the owner selling the property? And so I don't even care what the owner's selling it. I just want to know that I'm getting the property and getting it below market value. So people, sometimes I find really bad real estate agents that don't know what they're selling. They might be an out of area agent. They might just be a sloppy agent. The market may have moved. So recently, I'll use this as a very random, it's totally got nothing to do with property. I purchase all different assets that I invest in. Properties by core vehicle. It's been my favourite vehicle, and it's been the thing that enabled me to create financial independence for myself. I do purchase, I'm building a solar farm on one of my properties at the moment for myself personally. To mine cryptocurrency, I invest into precious metals, silver, and all that sort of stuff. I've seen a lot of my investors that go and purchase those metals, buying stuff from a coin shop at the moment. The coin shop's a coin shop selling off silver, right? They're selling a silver coin. They don't follow the silver prices that are going up and up and up every week. They're just following, oh, well, I've had this coin for the last 5 years sitting on my shelf. Someone wants to buy it, they can buy it. But the inside value of that silver is much greater than the price that they're actually selling it for. So there's lots of people in the world, if you go on to carsales.com and look at cars for sale, I'm sure that you'll see 10 Commodores there for 20 grand, and there'll be some Commodore that's on the market for 15,000. Doesn't mean the Commodore's blown up or whatever. It just means someone might be more motivated to sell it. They don't know what they're selling it for. They couldn't be bothered. Everybody's position is different. I like working with real estate agents that, on my side, they just want to get a deal. So real estate agents are employed by the owner to sell the property for the highest price, but there's a lot of crap real estate agents out there, as there is crap buyers agents out there that are just working for themselves. So when it comes down to selling a property, they just want to get the commission. So coming to Nathan, I take away a lot of the hurdles when it comes to buying. I make the selling process for the agent much easier, and they like and prefer dealing with me. So if I can minimize all the hurdles, so all they have to do is get it for the price that I want, then they, in essence, work for me, but they don't realize that they're working for me. So that's why I have such a large network of agents that can deliver me the results of those properties that are below market value. Cool, got lots more questions here. Keep them coming if you've got questions. Mel asks, what will happen to all the cash notes and coins when they switch us to digital cash? It'll be an ancient relic like toilet paper on Demolition Man back in the 90s, right? It'll be something that you only find in a museum or whatnot. They'll probably give like maybe a 2-year sort of time frame to say, okay, we're going to phase out cash. You can bring your cash into the bank. The banks at the moment aren't allowing people to deposit and are slowing the amount of cash that goes out. I had a mate who's a client of mine text me beforehand and say, don't go to the bank if you want to get cash out. They're limiting the amount of cash. He went and bought, said he was buying a car. They asked him like 1,000 questions as to what he's going to do with the cash. We can't give you that much, etc., etc. So as you take the money to the banks, it's just going to be harder and harder to get access to this cash as we head into a cashless world. So that's just my view of it. And it happens like when you look at times where they've upgraded notes. So when we used to have paper notes before we went to polymer back in the early 90s, they gave a period of time where you could still use the old sort of paper notes before they all had to be changed to polymer. So Kenny, hi Nathan, apologies, I was at work meeting that concluded at 8 p.m. What would you be able to share the recording for the first half of this session? Yes. I don't know how that works. You need to contact my team. They'll be able to get you access to the rest of this recording. So if you missed out on half of it, reach out to the team. They'll be able to get that for you. Sergio, do you buy in Perth? Yes, I'm probably the biggest buyer in Perth. A lot of people don't realise that I actually buy property in Perth. I don't talk about it out there in public generally. This is the first time I've ever told anyone in an open sort of session that I buy in Perth. I've been actively buying in Perth for quite some while now, as I have also been buying up all the mining towns around Australia. I go around and buy everything that's below market value, everything that's depressed in value because I'm a contrarian investor, as trends start to form. And then, that's when I want to get in. I want to get in when the market's suppressed. And I want to be buying. And sometimes people ask me, look, Nathan, the history for a property or whatever looks pretty bad. It's gone backwards. Why would I be buying this property for? That's the opportunity just there, right? If you look at Sydney market from 2013 to 2008, the market went backwards, maybe about 30% over that period of 5 years or so. If we look at the market from about 2008 to 2011, that caught back up. In 2011, the market was back to where it was in 2003. From 2011 to about 2016, the property market sort of doubled. So if you looked at a chart from 2008 to 2016, you'd be like, wow, that market has gone up so much. Whereas, yeah, if you look at it from the period of 2011 before the market, or 2009 before the market really took off, you could look back and say, well, the market didn't do too well. I don't want to buy a property which has been, oh, we've seen 10 years of double-digit growth or 5 years of double-digit growth, because the downside risk is so much greater at that point in time. So I want to be buying properties where it's below the rebuild cost, where it's below replacement cost, where it's below market value. I want to buy it where it's got positive cash flow to it or a neutral cash flow, and have the upside for the potential growth. So I love picking up properties in depressed markets, and Perth has been one of those markets that have been purchasing very quietly for my investors for quite a while now. What are your thoughts on owning caravan parks? I've never owned a caravan park. It could be good. I think there'd be a lot of upkeep and maintenance to them. I've thought about creating caravan parks. I've got some very large sort of land holdings, but I don't want to develop on them, and I don't have the funding to actually develop, because when I develop my properties, I'm going to want to keep them all and not actually sell them off. So that's going to be a bit of a different sort of concept. I thought, you know, to create a higher holding income, I could put some caravan parks on them, but never actually went into it too deeply to actually create a caravan park. So I don't own caravan parks. I own shopping centres, doctors' surgeries, multinational tenant sites. I own motels, all different stuff, but just not a caravan park. Thoughts? Dylan asked, thoughts on rent to rent. I don't understand what that is. Maybe rent to buy or rent to own or something like that. Maybe if you can just clarify that, Dylan, for me, that'd be great. Darren, do you use property managers who live in different states to the properties that they manage? No. The property managers need to be in the state that they actually manage. So you can't, like, when it comes to property management, you need to have people that are licensed in that specific area to be able to manage the property. So, for example, I'm here in the Gold Coast at the moment. In my Gold Coast office, there's about 15 property managers here that manage the local area here. I've got other people in other regional areas of Queensland which manage in those local areas, but I don't have people in New South Wales managing Queensland. I don't have people in Queensland managing Perth. They have to be local, understand, because law is very different. The laws are very confined to state, and you know, when dealing with a tenant, like sometimes there'll be an eviction or someone has to go around and check up on them or whatever, they need to be accessible to those areas. So yeah, they have to be in the local area. Arun, is it a good time to buy a property due to, I can't actually say that word, like it can't come out of my mouth, but I'll use the word corona because I can't say the word with the numbers on it. It's just a little thing because my thoughts on it is very different. The time to buy a property was probably around June last year. The market's actually taking off at the moment. I've been you know, very active in the market this year. I've been gazumped more in this year than what I have in the last sort of 6 to 7 years. This market reminds me very similar to the market in Sydney, for example, in about 2010, 2011. We've been in a deflationary cycle in the property market, especially on the East Coast and all across Australia, really, for the last 3 years. If you look at all of the charts, all of the stats, the market's been going backwards for 3 years. This is not something that's new. The market started to take off in the middle of last year and recover, but it came to a bit of a grinding halt around February. People were scared, Corona came in, whatever. Everyone's expecting the property prices to fall and collapse, but it's not something that I'm seeing. I'm getting gazumped on more properties than ever. There's more activity out there in the market than I've seen for the whole decade, really. The last time I saw a market like this was about 2010, 2011. So is now a bad time to buy property. I think the opposite. Not because I'm a property spruiker, not because I'm saying go buy property because I'm invested in the property. That's just what I'm seeing out there. I've been very open for those of you that are new and haven't, seen me for a long while. I was very negative on the market 3 years ago. Everyone said I was off my head. People called me and said that I was on drugs and all that sort of stuff, which I wasn't. I don't touch drugs. I just drink water. But yeah, like I'll say market's crap if it's crap, and it's a very good and hot market and a lot of opportunity out there in the market at the moment. Stephen, I hope you're safe, journey, and get back to New South Wales before the borders close. Yeah, I'm going to head back. I'm not too far from the border, so I'll be across there in the next few hours. Yeah, the border's actually closing to come into Queensland, not into New South Wales. But I guess there's sort of some way to get into any border, at any point. So, I'm not going to be locked out for too long because I've got to get back here and got to do things in this office as well. Mel, thanks. Kani, thanks. Mel, what's your attraction to Perth? I don't know if you say what's my attraction to Perth, Mel, due to the fact I use it in the example, or if you're saying about me purchasing over in Perth. For the example, it's just purely the furthest thing away from me, stuck to this piece of land and this continent we're on. But as for purchasing there as an investment, a lot of the properties that I'm buying there today in 2020 are selling for sort of a half or even a quarter of what they were selling for going back 10 years ago. There is a reason as to why. I want to share it with you guys here this evening. I haven't told anyone. I always skirt around this on my Facebook Lives and that because I don't want people knowing about it too much out there. But in October, this goes down to the research. When you buy a property and you utilize my services as a buyer's agent, it's not just that you're going, oh, Nathan's bought me a property. There's a lot of stuff that goes on in the background to get that property and to deliver it to you and to understand how it's going to, help you build that portfolio out. So there's information that came out in October last year. That information was to affect Perth and was to affect the Gold Coast. Back in 2008, 2009, Sydney hit a bottom, and what they did to try and pull those markets out of recession, so Sydney was in a recession in 08, it had fallen from 2003 for multiple years, for about 5 years. It wasn't the GFC. The GFC actually helped the market get out of the bottom, which is why I see that the GFD/Corona pandemic is here to get people out of, here to get the markets out of a bad place. Is that in 2008, Sydney got rezoned from being a city, Western Sydney, became a regional suburb, a regional city. And what that means is it's an immigration hotspot for skilled migrants. So if you are coming from India or from China or wherever you're coming from abroad and you're a doctor, right? To become a doctor in India, I believe you have to sit there for I have a lot of Indian staff. They talk to me about, what's back at home. I'm very well connected in that space as well. You would have a job, like here we have a job ad, goes out on Seek, someone calls up, sends over the resume, 5 people come in, you get a job. Apparently in India, you see people lined up around the building for that job. In order to become a skilled worker, like a doctor, a lawyer, accountant, IT person, or whatever, your skills as a doctor in India, you might have to go through 6-7 years of university, 8 years of it. It's not easy as what it is here in Australia, from what I understand. But by becoming a doctor, whatever country you're coming from, when you get to Australia, you're no longer a doctor. You're not a doctor and you're not recognised here in Australia. However, there's a program which enables people to migrate to regional cities. If you go to a capital city, you can't migrate there. If you go to a regional city, you can migrate there. You have to work in the regional city for a period of 10 years, and then you get a mutual recognition of becoming that skilled worker, a skilled migrant. So if you become a doctor in India, you come to Australia, you can't be a doctor. You become a doctor in India, come to Australia, move to a regional city, you can become a doctor and work there for 10 years, and then you become a doctor, you can go wherever you want in the country. Sydney got overcrowded with skilled workers, and then they had to go to more regional areas, more regional. So all these regional areas are full of skilled workers, migrants that are coming in the country. What has happened in October 2019 is that they actually opened up, they categorized the Gold Coast and Perth to be a regional city for skilled migrants. So we're going to start seeing a lot more skilled migrants coming to Perth and the Gold Coast and that southeast Queensland corridor. I'm in these markets way before these sorts of things happen, because I can see the writing on the wall before that happens. So what is my attraction to that city? We're buying properties at a half of what they used to sell. The market's starting to recover. The 10% yields. I'm picking up most of the properties I buy are sort of 8 to 10% yields. Most people would think that you're a liar if you went to a dinner party and said I've got a 10% yield on a property or a 15% yield on a property. But that's what we're getting for all these properties, and they're very cheap. And it's a capital city, and it's going to grow. So I was not buying in that market when it was very heated up and over pumped. John, do I think, I'm going to say the specific suburb, I'm not going to say the word, you've asked me a suburb, and I don't want to give too much, context around a suburb. That suburb you asked me, so the question goes, do you think this specific suburb in Queensland is a good buy right now? It's tanked massively, will it rebound? It has rebounded in 2020 by about, I'd say in some areas there, maybe about 60%. This market that John is referring to, properties were selling for 500 grand, went down to about 60 to 100 grand for these properties. This year, it hit a bottom in about January. I've been buying when the market was very low, so yes, I have been buying in the market. There is nothing available. You can't buy a 2-bedroom unit for under 100,000. I did get a 2-bedroom townhouse the other day in that suburb for someone for $82,000, which is great because most of the properties in that area are selling for $120,000 to $140,000 now. And rents used to be about $500 a week. So the rent was $500, the purchase price was $500. Everybody was booming over this area. The market crashed. Everyone went bankrupt. Purchase price was $60,000 to $100,000. I came in around the $60,000 price range, buying up to around the $80,000 price range. Now that it's going higher, I'm not playing in that game. But yes, it is a decent area, and it is an area that I've been very heavily invested into. Barbig, hi Nathan, I bought a property in Claremont for $360, and within 2 years, and still is only selling for $100,000. It's still, if it still sells, should I keep holding or should I sell? I'm not here to give like sort of that specific sort of financial advice. It's something maybe we could chat about over a few glasses of waters over a phone. But yeah, like there's many variables in that perspective. What I'm finding in mining towns is that they are recovering. So if you have bought and been caught by one of those scammers out there buying in a mining town and the market has crashed, hang in there. It's something we could talk about offline and work out a bit of a strategy around that. But the market is recovering in a lot of those areas, so you may actually do okay. I'm not suggesting people to go out to mining towns and go buy them up, but some of those people do have the opportunity to get out of it. So I wouldn't feel like it's all over Red Rover and you've got no options there. So yeah, happy to have a chat offline. One thing as well, guys. I haven't tried to sell you anything. I don't actually have a sales script here for this evening. I know a lot of you people might ask, how can I start working with you guys? How can I start working with you, Nathan, and build a property portfolio? How can I utilize your services as a buyer's agent? Flick my team an email at admin@binvested.com.au. Probably the best place to start off with would be a map session. A map session is just a strategy session between yourselves and myself. To look at your goals, work out a bit of a strategy of where you're at, where you're trying to go, and link those two together, build out a strategy. And then if you want to use my services as a buyer's agent, I'm here to help you be able to locate, negotiate the deals, be able to build that portfolio, holding your hand along the way to help you get there, getting the properties below market value with upside for capital growth and a strong cash flow. So probably the best place would be to start with a map session, speak to my team, admin at binvested.com.au, give us a call, 1300 367 925, and yeah, have a chat. Got some more questions here. I'm going to answer them, and then I'll probably get offline in the next sort of 5 minutes or so. Thanks, Dave. Do you put in any of your contracts to cover yourself for liquidated damages in settlement is delayed? You can actually add specific clauses to contracts. It's the importance of having a very good lawyer. So Stephen Sidorowski, Zenith Legal is my lawyer's details. If you need help on that, anyone needs help, Zenith Legal, shout out to Steve Sidorowski. He's been my personal lawyer for over the last decade. Humble guy, very, very good guy, very knowledgeable, and he looks after all of my investors as well. Daniel, when you buy property and you put tenants in, do you tell your property manager to raise the rent every year, or are you looking at the rates around the area to match the rate of increase? From my perspective, I actually don't like real estate agents and property managers are out there. I've had some good experiences and some really bad ones. From my side of things, about 7 years ago, I started a firm, which is a property management business, purely asset management. Like that's all we do is just manage people's assets. You can reach out to my team and have a chat to them. Like just email the team at admin@binvested.com.au. I've got property managers all across the country. At the moment, I've got a promo for the month of August, which if you bring a property over to my firm for us to manage, we'll actually get you access to landlord insurance, and I will pay for it personally as a token of good gesture to welcome you on board to the business. So, but yeah, my property managers are always looking at how can we, get the most amount of returns from our properties. I run my office like a hedge fund. I want to make sure every $5, every $2.50, every $10 that we can get extra from a rent from a property is accounted for, because ultimately, at the end of the day, strength comes from numbers, and that scale of numbers in your portfolio, the difference between retirement or not, is stuck in the hands of a property manager, and generally they're doing a shit job in a real estate office. So I always look probably every quarter as to see what's happening in every rental market that I'm invested in. I also do that for my investors as well. And I work very closely with my property managers. I call them asset managers because they're managing your assets to get you the best returns, and try to tweak. Like if you've got 10 properties, you increase rent by $10 per week, that's an extra $100 per week. Over a period of 10 years, you do that every year for the next 10 years. There's $1,000 a week that you get. That's your retirement to be able to live off that cash flow. So, Andrea, drive safe. Thanks, Andrea. Arun, thank you, very good. Thank you, mate. Cameron, have you ever considered investing overseas? I have thought about it. I don't like it due to the fact that when you're investing overseas compared to investing in motherland being Australia, in Australia, there's so much opportunity. I make lots of money from investing in the properties in Australia. There's so many opportunities here. If I go overseas, I have to learn new tax laws, legal side of things, property management laws. I've seen stories of people that have been, people that are friends with friends, which have been shot by doing just general sort of property management work. If the currencies, the biggest thing is, let's say, for instance, the Aussie dollar falls or rises in value compared to the US dollar. Let's say we're going to invest in the US. You could double the value of your property, but if the dollar falls in half, you bring it back to this country and you've made no money. So there is many other factors at play, and currency manipulation is probably the biggest reason as to why I don't invest outside of this country. I invest in all different stuff, not just properties, but I've got risks surrounding the currency rates in other sort of financial instruments. And yeah, I don't need to bring that into property when I'm making good money out of my property investing in Australia. There's lots of people that will try and sell you the dream of buying a property for cheap in some other country, but when you can buy capital city in Australia for $100,000 or $50,000, why would you want to go to some other country? Daniels Road, in the private sector, plenty of businesses out of job and getting the grants, JobKeeper and JobSeeker. Are you looking at investing in Canberra area because there are more government jobs ever there? And are you, and you can get more paying tenants over there? I'm here in the asset management office of Southeast Queensland at the moment, and I was talking to the team here the last few days, and we have got no properties that have come down in rent. We haven't dropped any of our rents for our owners, so they're still getting their existing rents. There might be 2 or 3 out of thousands of properties which have had, you know, a compensation of, like, say for instance, the tenant was paying $300, they're paying $200 at the moment, but that $100, for example, is accruing as a debt, and we'll be holding the tenants liable for that and taking them on a civil matter to be able to get that rent for our owners, so no one will be out of pocket. So the rental delinquencies are very low, and the amount of tenants that are out there, especially in Sydney and Brisbane and Gold Coast here, are very, very low. There's a lot of tenants out there, not enough property. So we are actually in a sort of rental crisis at this point in time as well, which is really cool to see, because I think that we could be at the early stages of a rental boom as well, which would be really cool and just solidify the importance of having a diversified portfolio, as well as being able to have low interest rates and an inflationary factor on the rental return, which would be really, really cool for building wealth for all of our investors. John, actually, I think Central Coast is good value. You can buy dual income properties that are positive cash flow. Question is, will you benchmark in good return? If you buy for $850 and get $850 a week return, is that a good? Our view is in mine, and I make $1,300 per month in cash flow. Is this good, or do you expect to get better? I expect better. For $850,000, I could buy you maybe 6 properties here in Brisbane, and get $300 a week rent for them, or 250. Let's call it 250 times 6. That's $1,500 a week, and you've got 6 properties instead of 1 dual key property. And those dual key properties, those dual income properties, are generally very overinflated and have no room for growth. So going back to the 3 keys: buying at below market value, having a strong cash flow, having good upside for capital growth. If it doesn't tick those 3 boxes, I don't want to buy it. So are you buying at below market value, or are you paying market value? What is the chance of it going up and doubling in value? Are you overexposed into that one asset? I know these glossy brochures can promote them as being nice and all that sort of stuff, but how are you going to make money out of them? So for me personally, I'd rather buy different types of assets that are going to give me greater returns. And that's not sort of saying that that's a bad deal that you've got there. It's just saying that, you know, that's just not my cup of tea, that's all. So Barvic, wait, my mouse cursor keeps disappearing here. We'll contact you. Look forward to chatting soon. Carney, what are your thoughts on the Melbourne market and potential large job losses and rental affordability challenges on the horizon whilst the current economy is stagnating, and what the property market might look like in 2021? We're going to see more and more stimulus packages. We're going to go to negative interest rates, guys. I don't want to go too far off topic of today, because we're talking about buyers agencies and buying properties below market value and all that sort of stuff. I do talk a lot on YouTube and Facebook Lives and Instagram Lives about the economy and where I see that heading. So there's a lot of info I've put out there. But in short, we're seeing a lot of stimulus packages come in the marketplace. We're seeing interest rates almost zero. We're going to see interest rates go to negative interest rates. I was just looking at the charts, the stats that I look at on a daily basis, and it actually cracked past a point where we would see a 0% interest rate. So once we go to 0, we will go to negative interest rates, and that will put a lot of money creation into the marketplace, and a lot of more money flowing out there, and get the basically manipulation of numbers out there in the system, monetary numbers, and get the economy flowing around again. So yeah. Stephen, how can I ask real estate agents about the off-market investor networks? I guess, talking to your real estate agents, if you're going to go out and do it yourself, ask the real estate agents, do you have anything that's below market value? Do you have anyone that's a distressed seller? Do you have anyone that's motivated to sell? It all comes down to like research and understanding those markets. So I know markets throughout the country off the back of my hand, and I go, okay, cool, I know what's been happening here, blah, blah, blah. I use a lot of tools, being RP data, sort of same sort of tools that the valuers use out there. From just my own personal memory, I've got a very, very good memory when it comes to, if you want to play a game of, let's say, I don't even know the name of it, the Guess Who, right? And you pull up the two things, and where was that face before and whatnot. Like that game, I'll win on it all the time, because not that I play it, but whenever I see something like that, I know where I had seen a certain stat before, a certain number. I can still tell you addresses, what the houses look like in certain streets that I was buying back in 2006 and 2008 and 2010, just because I was so excited about it and have that knowledge on them. So yeah, becoming an expert of the area is really important if you're going to do it yourself, or you can employ someone like myself and B.Invested and my team, property investment agents, to sort of locate and negotiate those properties on your behalf for you. I take all the sort of stress out of all that. What will the property market look like in 2021? Just answered that one. John, great session. Thanks for being here. Luke. Luke asked, Birchy Wednesday, have you lost out on any properties recently due to delays with bank processing? What clauses can be added to contracts to protect buyers from delays in banks, ANZ, processing loans? Great content, thanks. Appreciate everyone obviously being here this evening and spending the time to be a part of the community and being a part of the webinar class. As for the banks, there is massive delays out there. Yes, I have lost some deals out of it, and it's just a part of the game that we're in. Some banks like ANZ, for those of you that don't know, actually take about 42 days to get a loan at the moment, to get it looked at and to be passed, just because a lot of the back end of the banks are located in Bangalore or Manila in the Philippines. And they're in sort of lockdowns and all that sort of stuff. So they're working at like sort of skeleton staff and at very delayed capacity. So I always put into my contracts, depending on what state, if it's in Perth or if it's in Queensland, I put in there subject to finance, pest, building and due diligence clauses. I've got these clauses which I put in my contracts, which are watertight. I've never even had anyone lose over the last 10, 11 years that I've been buying in Queensland. Not even $1 of deposit has been lost here in Queensland from those clauses. So yeah, I do put clauses in to protect my investors and protect the interests on that front. John, cool. Luke, Birchie joined the webinar late because I was living life on my terms. What would you please add to this YouTube or somewhere so I can view the first half? Speak to the team, ask them for a copy of the webinar. They can get that to you. So yeah, it's not all going to be lost. You can come and watch the rest of it a little bit later. Brian, safe travels. Thanking you. Daniel, safe travels. You're a legend. And gold and rusty gold. I haven't got remember it all. I appreciate that. Dean, I love the webinar. Look forward to our chat tomorrow. Awesome, mate. And sorry, Dean, that I couldn't attend to our chat the other day. Just things have been crazy at my end. But yeah, on that note, everybody, just want to thank you for joining the webinar this evening. Thanks for your questions. Thanks for your participation. If you do need any help with anything, I'd love to be a part of your success team. I'd love to be a part of your journey and be able to help you with your buyer's agent. Obviously, buying properties below market value is my thing. I've built a big reputation on that, and actually sort of pioneered this whole industry as I was one of the early people and probably one of the only ones that did, or I was the only one doing exactly what I'm doing at the moment. So thanks, guys. Catch up soon. Have a great evening, and bye for now.